As an investor, I've always been interested in creating a property portfolio that not just gets great long-term capital growth, but extremely strong positive cash flow during my holding period. For me, the positive cash flows always help me sleep better at night. It's buffered when interest rates go up and down, and it's reduced the risk across my portfolio, which is why I wanted to show you how to create a positive portfolio in the current market. Now, there are a whole bunch of different ideas online about how you can create a positive cash flow portfolio. But in today's video, I wanted to focus on a really simple idea that's working in Brisbane right now. Now, the concept is super simple. We go to one of the high quality middle ring suburbs in Brisbane and we look for a 600 square metre block and we find a good quality, tenant ready, low maintenance property for around about that $550K mark at rents for somewhere around about that $500 a week mark. Now, immediately after settlement, we rent the front property out and we work with one of the granny flat builders in Brisbane and we build a secondary dwelling or granny flat. Now, the cost of constructing a granny flat has gone up a little bit in recent years, but still sits somewhere around about that $200K mark, plus or minus $5,000 either way. Now, because of the number of people moving into Brisbane at the moment, the rent returns have absolutely exploded in the affordable part of the market, and your $200K granny flat rents for somewhere around about that $420 a week mark. So if we look at the $550K property plus the $200K granny flat, we're looking at about a $750,000 investment to be in one of the top performing capital cities of Australia for around about the $920 a week in rent. Now, to find properties on the east coast of Australia close to the city that are still undervalued is extremely difficult unless you're looking in the Brisbane market. What I wanted to do now is actually break down the income versus the expenses on this type of opportunity so you can see just how good this deal looks. Now, if we look at the cash flow on this opportunity, we're talking about a $750,000 house and granny flat with the 20% cash deposit, and instead of the extra 20% deposit that I wrote twice, a 6% interest rate. Now, if we look at the expenses and the income from a cash flow perspective on the property, the first expense is always going to be those softer things. So things like insurance, rates, water, management, and maintenance. And no matter where you buy in Australia, that's going to be plus or minus a couple of $1,000s per year for a property worth about that $550 to $750K mark. Now, the second expense is the interest on the property. Now, how I've worked this out is the $750,000 for the house and granny flat minus the 20% deposit, which means we're carrying about $600,000 of debt, times by a 6% interest rate equals around about that $36,000 per year in interest. Now, when I look at the softer expenses plus the interest on the property, we're looking at about $44,000 per year in costs or expenses to hold this property. Look at the income side of this property, which is the house and granny flat. We're going to obviously have the rent for the home, which is $500 per week times by 51 weeks a year. We're sitting at $25,500 in rent for the home. Then we've got the rent from the granny flat, which is $420 a week times by 51 weeks a year, coming in at $21,400. And then we've got the tax benefit in Australia, which is currently available from building a brand new property. All you have to do to understand that is talk to a tax depreciation specialist and your accountant. Now, that might not always be there, but I've just built some granny flats myself, and that's roughly what I'm getting per year back at tax time, which is about $5,000, sometimes even up to about $7,500 per year. But if I add the house rent plus the granny flat rent plus the tax benefit, we're looking at a total income of around about the $51,920 per week, which is an incredible start in the right direction. It means that this house and granny flat in Brisbane isn't cutting into your week-to-week living costs, even with a 6% interest rate. And if interest rates do come down by the 1.25% the Commonwealth Bank's expecting them to by the end of next year, then this could look even better. From my personal experience from talking to literally thousands of investors over the last 12 years, there are so many different ways to get towards financial freedom as an investor. But for me personally, I love the idea of buying Australia's best markets and capital cities, buying close to the city or the beach, getting the good long-term capital growth that you can expect from something like this, but getting some exceptional cash flow and taking the pressure off yourself and your family on your journey to financial freedom. Now, from my experience from looking at literally 70 suburbs every single day of the week in Brisbane right now, this type of opportunity literally comes up a handful of times a month. By the time you do all of the due diligence, most of the sites, in fact, 99% of the sites in Brisbane don't actually work. Now, for those of you who are seriously thinking about buying a property in the next 12 months, I'd love to offer you a one-on-one strategy session where we can talk about where you are today, where you'd like to be longer term. We can explain this idea and many others like it to you, and you can take those ideas and go and absolutely smash it yourself, or potentially become one of the extremely small number of clients that we work with each month. But either way, I absolutely love this strategy and own 3 of these types of properties myself, which will not just get me that long-term capital growth that I'm after, but give me incredibly good cash flow, reduce my risk as an investor, and hopefully once I own them outright in the future, will create a passive income for life. But either way, whether you go out on your own or become one of the extremely small number of clients that we work with each month, we wish you absolutely all the best and hope you've enjoyed this idea to improve the cash flow on your portfolio.
Whew, that's a wrap.
That's a wrap.
Getting cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.